Good afternoon, you trading machines. I've got a plea for you. I'm going to start the video a little bit differently because I always say it at the end, and I don't think anybody watches to the end. So I'm going to say it at the beginning. YouTube refers these videos to people based on whether or not you like the video, hit the thumbs up button, or if you're subscribed. And the other way is if you comment. If people are commenting, liking, subscribing, then they refer them to other people. I think I do have some content that's worth looking at. I don't do a whole lot of fluff. I'm not any no smoke and mirrors over here. Just good price action. My chart levels are good. I read the price action pretty well. What I have, I'll take this off for now. We'll put it on again later. So today, this is NQ's price action. My hypo for the day, we opened with a gap down. I thought we might take out this regular trading hour created from yesterday. We'd take out the high of it. That's the entire movement from yesterday, which was a holiday. So it really wasn't, the market wasn't even open. The equities market wasn't open, but the futures market was. So that's the entire day. And we did take out the high of it and then pushed all the way down through these lows. So I didn't really count that one. I wasn't really thinking that it was a level that mattered, but it turned out it did. I guess it mattered a little bit. At least the high of it did. But we pushed down through. This is 4 hour low from Friday. We took out these 4 hour lows, and then this was the low of a daily low and the low of the week. Took all that out, and then we reversed violently back up to the top and made a march for these highs. So, what does that tell us? That's what I have this Fibonacci on here for. We've danced with that high several times. NQ actually took it out. You could even do it to here, all the way to there. I think NQ already took it out by a tick right there. It did. But ES has not taken it out. So I think these are a target. Anytime you see a good, clean, straight line on the chart, even if you go to a smaller time frame, like a 15-minute, you see a straight line on the chart here, that's a target for price. If you look down here, we saw a straight line, and that's a target for price. It's where people are going to put their stops. So as we go into tomorrow, or if you trade the Asia session or anything like that, what I like to do is put a Fibonacci measuring tool on the entire movement of the day. Because if we're going to go here, we will pull back and run some stops first. Okay. So usually if we pull back, we'll pull back 75. That's the 25% mark. And this is the 50% mark. I'm going to get rid of this so we don't even have to look at it. There we go. That's the 50% mark. If you don't want to leave all of this on here, you can just get rid of that and mark the 50% line right there. And I usually will label it 50%. There we go. So if we are going to offer there, I would expect it to pull back, possibly to there. Now, do we have any straight lines there? Well, we have two relative equal lows on the 15-minute chart right here. That low was left when we pulled back to it. We pulled back a little and then we started and went up. So that could be a draw. Don't know if it will be, maybe. We're already to the 25% mark, so I'd expect it to come and run a little bit more. And these right here could be a target. Maybe it just goes there and then rips higher. But this definitely is going to be a target as we move through the week. Maybe we pull back 75% of today's move and then go. But however far down we go, just know this area will most likely be revisited. Let's look at it over here on ES. Same kind of a deal. I can show you its reversal pattern, which was kind of crappy today. I like the one on the way down better than the one on the way up. Okay, so here we came up here when we opened. This is our opening range candle here. And we went up and we took settlement and we took out these highs right here. We left that one from yesterday, which I wasn't concerned about because like I said, equities weren't even trading. I didn't think it even would matter. And it didn't, not for ES. So we pushed up there, consolidated, and then we pulled away. We started breaking the low of that range. I went ahead and jumped in with a couple of micros there, just expecting it to at least go to the low of this opening range candle. And then when we got there and we whipped back up into here, that fair value gap and rejected, I went ahead and sold a couple of more. When we got past here, I sold a couple of more. And then I was aiming for this daily low down here. It's a 4-hour regular trading hour low, a daily low, and it's also the low of last week. And pre-market low was just slightly below it. So that's where my aim point for take profit was. And that was about an $800 trade. Now, this is the part I did not like. We came down here and we took out this 4-hour regular trading hour low that was created a while back. That was those straight lines I was showing you earlier. That's what we took out on ES over here. And so that should be a reversal pattern to the upside right here. Okay. So we pushed up. There's our breaker. We got above it with a fair value gap. We pushed up here. Didn't quite make it to opening range low and then fell out of bed again. And we made a new low. Usually on this leg, I like to see a higher low. So it would come down and it would just stop going down about here and then reverse again, and that would be our entry. Or this here could be the higher low, and then this would be our entry. But if you were aiming for anything up here, you got smoked. And besides that candle right there, and I mean, you're only getting in maybe 3 or 4 points. So then this little rip down was, to me, a slap in the face and manual manipulation, in my opinion. But we did come down, and then we started consolidating here. We took out this low. Your best bet in a situation like this is not to wait for the fair value gap to the upside. Your best bet is just to try to enter at the low of this range with the expectation that we at least go back up to this high, or I don't know where else you would expect to go. Say we're in a range and we're going to go there. This one, if you got in somewhere at the bottom of this range or even the middle of this range, without waiting for fair value gaps to start forming above it, which you could have gotten in there, that would have been fine. But you had a lot more price movement, and you could really limit your stop loss. Let's say if we got in here at this one right here, and we put our stop below here, that's 20 points. That's $100 stop loss on one micro MES. If you got in down here and you put the same stop loss 20 points below, I mean, we would have really had to start falling out of bed to get down to there. There was a level down there. But that same 20-point stop loss, you could have cut it in half and put 2 micros on there. So you might have got smoked, but it would have been a very cheap trade. But you could also get in here. But to me, when it already pushed down again, I would be thinking directional day at that point. It's 11 o'clock, and we haven't reversed. So this little rip here was unexpected, in my opinion. And I actually got in on it to the downside. And then as it was going up, I was like, it's got to pull back at some point. And it kept going. It's got to pull back at some point. And it kept on going. It kept on going. And finally, when it took that high and started this, I sold. I added to my short position to the extent that where I could get out when it hit this purple line here, that break even, and that's what I did. So I was in the hole pretty good, and when it started this rip down, I was just adding flat, and managed to get out, save myself uh, a big loss there because that I just really did not expect it to do just a straight freaking rip all the way up there with no pullback, and that was it's one of those things, you can't ever over leverage yourself expecting the price to go some level or whatever because it can do the unexpected and it can do it in a hurry and you'll blow your account if you get too much price on there. So let's look at ES. I've got these relative equal highs marked. My line is a little bit below it, and you know why? Because each time it's come up here, it's left the last one by a tick and then pulled all the freaking way back. So we have all of these. That's a good, clean, straight line. Price is going here eventually. So the same as NQ, which I'm preferring ES right now because NQ it just keeps on putting up gigantic candles. So same as here, we're gonna mark out the entire movement of the day. So that's the high of the day right there. And so I would expect to pull back to about the halfway point of the day's movement. So we can also mark that as a potential. I'll just copy this one over here. And we can mark it as a potential pullback point. It may not get back that far down, but then again, it might. So that's my hypo going into Asia or New York tomorrow. We pull back to the halfway point of today's move, and then we smoke those highs right there. Once we get there, we may continue up, or we may reverse all the way back down to here. Who knows? We're caught in quite a range here. If you look at the daily chart, I mean, at some point, don't we have to pull back for the market to be healthy? I mean, that's just a choppy freaking mess. We do have down here a regular trading hour gap that the market oftentimes will trade into those gaps. So do we come down here? I mean, we already took out these monthly lows. We went all the way back up, made a brand new all-time high. Do we take those and continue to make a new all-time high? I don't know. It's just a choppy mess, and so you don't really know where it's going. What ICT advises to do is look at this as a range, and we just took the low of it, and that's the high of it. So when you take the low, what do you typically do? You go to the high. And he recommends a 20-day up high and low. So it would be this. You might even just be able to use this, but your 20-day high and low would be basically 4 weeks. One, 2, 3, 4. And we won't count today because it just took one. So that would be the high of our weekly range. And the low of our weekly range would have been right here. No, here. Right there. So in the last 20 days, we've traded up that high and we've traded down that low. That's 67.50. So do we take these highs and offer to the low? Possibly. Do we take these highs and go all the way back up here? Because this one, when it went down, we were referring to these 20 days. Rejected. We'd have to go back all the way to here. That's definitely the weekly low it took. But do we want these? Don't know. That's the ambiguity of it all. But this, definitely a target. Any push down we get, whether it's to the 50% mark or halfway there or 75% mark, That's a target right there. I'm definitely going to be looking for a long as we go into Asia and tomorrow to take that freaking high right there. It's been sitting there too long, and it's too clean, too straight of a line to be left untouched. Now, I have seen that in the past where the market's gone up like that and it left it for like several weeks and then finally came and took it. And that might be the case here. Maybe this was an attempt to push higher that failed, and we should be looking at it as okay, we're going south here. We're not taking those highs. We're going to come down here first and then go take those highs. Maybe that's the way we should be looking at it. Because NQ did take its high. No. If we come down here into this 50% of the day and we reject and start heading higher, I'm targeting that. If we come through the 50% of the day and we start offering lower, I'm targeting down here. There is one at 67.50, right at the 67.50 range. Yeah, right here, 67.75, 67.34. I thought there was one at 67.50, but I guess not. That one's the next low, and then we have this gap we already filled. So, yeah, that's our next low right there that has not yet been taken to the downside. Right there. 67.76. So we could offer lower and target that thing. It's hard to say. But that straight line looks too inviting to leave alone. It really, really does. But we had one here.